Going over the results for May 2023 in the 250K stock index portfolio, minus 15,520 were the hypothetical results. The live results were a little better, minus 12,967.39. And let's go over, I want to show you the portfolio calculator, the drawdown curve. We had 4 strategies that were new that didn't do that well. The opening chops, as well as the new zigzag strategy, and it pulled us down here. And so good news is, with about an hour left in trading today, we are working on getting most of those losses back all in one day. We'll see how this day finishes up, but good favorable price action today on the first trading day of June. I want to show you the Multicharts Portfolio Calculator as well. Here are the results going back to 2018, and you can see the total net profit. This is the close trade drawdown, not the end of day drawdown. And so we've discussed measuring risk on different intervals. Sometimes money managers will measure risk on an end of month basis or an end of quarter basis. And so if you're, if you have this, if you're up 4 months in a row and then you're down this month, your drawdown is at this point, and it doesn't look intra-month at maybe how you were up and then down. That's an end of month basis. We spend a lot of time looking at it on an end of day basis, and then you have other scenarios where you look at it on a closed trade basis, and then you have funded trader programs that look at it on a tick by tick basis, which is pretty extreme. I don't see many professional traders. A lot of funded trader programs will, for example, our robot is up 6,000 on the day, and you have a funded trader program that has a 2K trailing stop loss intraday, and it goes down 2K. It may goes down 2.1K. You're stopped out. You're up 3.9K on the day, but according to the funded trader program, you didn't manage risk properly. And if you back test some of these ideas, they don't back test that well. On this one particular trade, a tight trailing stop loss may have worked, and it would have been best in this case, but it doesn't. Typically, these funded trader program risk management, when you program into a trading system, makes the trading system perform more poorly. And so different risk measurements, I wanted to go over different risk measurements and the way you think about it in trading. Typically, you have to not micromanage a strategy this much, and when you have a group of strategies, if you try to micromanage it, it'll just be a slow downturn. You'll churn your account if you micromanage it, and instead of allowing for there to be some volatility, you can go up. But if you just micromanage all the turning points, you get more trades and you end up with a slow downtrend. So that's a quick discussion on management. Risk management and how you perceive that on the time frame and on the interval. And so let's look at the drawdown curve, and I want to show you, this is all 32 strategies. So this is the closed trade drawdown curve. Came down here, started to recover, double dipped, and so there are 4 strategies that particularly hurt us. This is long and shorts, and you can see going back to 2018 how well this is done. Don't like how it did this past month. I like how well it is trading today and getting those losses back with an hour to go. Let's look at the trade analysis as well. You can see most of the profits are on the long side. $82 average trade profit on the long trades, 51 on the short, and the as far as the performance is concerned, much more profit on the long side. You see the long trades right there. That's the profit. And then if you take a look at this, 39.75 is the return on max portfolio on drawdown. And then the max close trade drawdown is this number. And I want to point these numbers out because what I'm going to do next is I have a method for isolating trades to just take long only. What happens if we just take long only trades? What happens if we removed those 4 strategies? And you'll see the results. Also want to look at the periodical analysis. Monthly periodical analysis is minus 16,575, and that was in May. So the portfolio calculator in Excel shows about minus 15, minus 15K, minus 15.2K, I think is what it was. And then there was one minus 1K trade extra in gap continuation in reverse that showed up in multi-charts that did not show up in the trade station. And in multi-charts we're using @ES with the custom session. And in TradeStation, we're using @ES.D, and the closing values were different on May the 24th, and that created that extra trade on this contract, but not on this contract, which attributes to another minus 1K loss. And so because of that, I tested it, and it actually, longer term, that ES on the custom session on the U.S. stock actually works better than the @ES.D. So we may make that change to use it @ES with a custom session instead of @ES.D for gap continuation and reverse. And so let's look at now just the long only trades. I'm going to pause the video and run this. It's going to take some time to do that. So I'm going to pause the video and I'll come back to it. So while I am letting this run on the long only, I want to show you an extreme market inefficiency, crazy bullishness. This is just buying the Nasdaq futures at the open if the previous day's close was at 16.15, so it wouldn't do that on a holiday. So for example, it didn't buy it on Tuesday because Monday was a holiday and the last price was not 16.15. I'll show you the code in a minute. I want to talk about this setup right here. So you see, this is up about 70,000 this year in about 5 months. All it does is buy at the open and sells it right at the close, end of day exit. The market, this has never been more bullish. Well, I'm only testing it back 5 years, but from a dollar value at these index levels, I don't believe, I could go back and test it, I don't believe it'd be this bullish. I want to compare it to what happened when during the pandemic, when the Fed printed all that money around March of 2020. You saw this run up about 45,000 in 6 months from March to September of 2020. About 5 or 6 months, ran up 45,000 right in here. And then since about June of last year, when everyone thought the Fed would pivot, and they haven't yet, even though the narrative has changed to make it bullish, and especially since January the 1st, you see right at 1227, January the 3rd, just right there, up 70 grand in 5 months, just buying the open of the Nasdaq. It's never been more extreme. There's been much discussion on CNBC and others, and you read through posts on this narrow market rally, how there's only 5 stocks that lead the way, and how the Nasdaq has really pushed the market higher. And you can really see that in this strategy setup. The market, this is inefficient because it shouldn't be that easy. There are drawdowns, but if you look at just the annual setup on this, you're looking at what, 71K. This has a live trade today, so it's up 71,000 on 100 trades just doing this. $700 average trade profit. And so major inefficiency, crazy bullishness, and you're likely to say, wow, it's at a new high. It's about the end of that run. But you have to be careful because these kind of things can get carried away by multiples. And so you can't just all of a sudden stop taking long trades or start calling a top or taking short trades. Because right now where we are in the Nasdaq, we could, the all-time highs are starting to show up on the radar screen after the bounce back we've had. So just this extreme liquidity still in the market, driving prices higher, especially in the Nasdaq. I wanted to share this with you while the portfolio calculator is still calculating the long-only setup, and I want to show you the results of just taking long-only trades with those 32 strategies. After it's done calculating, I'm going to pause the video and I'll show you that again. So here are the results of long-only. You can see, I want to go over the periodical monthly period analysis and show you that. And so up 24K, if you just take long trades in May. But you can see how some of these other months are larger than a normal losing month. In April of 2022, September 2021, minus 32, minus 36. You also have your equity curve. You have these bigger drawdowns longer term when you don't have short trades. Now in the very short term, much better, really nice. In the past 12 to 18 months, really nice drawdown curve. But longer term, if you don't have those short strategies in, you can get have some deeper and longer drawdowns than you would if you trade them both. That's historically. Let's look at the performance summary real quick. This number is much smaller. I think it was 39.1. Now it's 17.1 because your drawdown. This drawdown goes to 64K versus what is 41K or 44K, and then let's look at the trade analysis. Now the trades, you get $81 average trade profit. Now keep in mind that just the long trades here, the numbers are going to look different than if you have the long trades and the long and short, because some of these have max daily entries. And so, for example, if you had a strategy that took a short trade first, it's not taking those short trades. Now it takes another long trade, or it reverses. Sometimes it reverses off of a short trade. And so the long trades isolated as long only are different than if you just compare this column when you had long and short trades. It's going to be a little bit different. It's not going to be exactly the same. And so I'm going to point that out as well. And so in the short term, it's been better to have long only, but what do you do about this in the long term? And what about the bias you set up? If you set up this bias, it'll eventually come back and get you, in my opinion. And so that's the tricky part of this, is maintaining a long and short bias, because you never know when that next sell-off is going to happen and all the long trades get killed and the short trades keep you in the game. And so that's what we want, and that's why we keep the short trades in this. Like I said, it would have been very, very nice just to take long only trades in May instead of minus 15, maybe plus 24. And so really, really nice results taking long only. Let's look at this setup once again. Let's look at long only without the opening chop, 3 opening chop strategies, and zigzag 2023. So what I can do to remove those is I can go in here and I can uncheck opening chop 2, tick chop, zigzag 2023, and I can do the back test here. And I'll pause the video and we'll come back to this. So if we remove those 4 strategies, our May results are 34.9K instead of around minus 15 to 16K. 50K swing, long only, and removing those 4 strategies is a 50K swing. And so you can see that the difference is a small change can make in trading sometimes, which means we have a lot of strong strategies. But we also, if you look at this longer term, the drawdowns are steeper, trading long only, and you only get 19.12 versus taking long short and taking all 32 strategies. Your overall longer term drawdown is smaller. Your return on max portfolio drawdown is higher. So that's why we remain where we are. I do have some new strategies that I'm working on, and so look forward to sharing those, potentially adding those to the portfolio calculator and our live trading. But once again, our live results for May 2023 were minus 12,967.39 versus a hypothetical of minus 15,520. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.